Hey, what's going on, guys? It's Ricky with TechBud Solutions. So why exactly did Microsoft and Google gap up today? Let's go ahead and start sharing my screen and jump right into it. I actually traded one of these and I actually want to show you guys very quickly my hotkeys work. Here he goes. First off, I want to talk about one of the losses that I took today. I was shorting Tesla. A huge breakout happened on Tesla. I cut my losses. I re-entered the short, cut my losses, re-entered the short. I ended up losing $11,500. Again, wanted to make sure that I not only show you the green days, but of course the red days. But when Google reported earnings today, it gapped up at one point 16%, a little bit over 16%. I announced it to my LPP team within our trade ideas, letting them know that I'm opening a short position on Google, but that obviously it's super risky if it doesn't go exactly according to plan. Overall, once it did peak at highs of 181.90, we ended up seeing a retracement all the way back down to 174. And if you see the price target that I set for myself, I believe it was 174. Yeah, price target is 174, and I think we hit lows of like 173.50 during the extended hours. So that was really neat to see. And I walked away with $7,300 on that trade alone, making back a little bit of the losses that I lost on Tesla, but overall still down about $4,000 net between those two trades. So Google ended 11.5% in the green, and then Microsoft 4.4% in the green. As you can see, I didn't trade Microsoft. But why? Why is it that there's such a discrepancy between those two? Why is it that Microsoft only gapped up 4.4%? Still amazing, right? To one of the most valuable companies that's publicly traded, if not the most, at 2.97 trillion. So it gapping up 4% is great. But Google, with a $1.94 trillion market cap, it gapped up 11, but at 1.16%. What caused this? Super simple. First off, let's talk about the earnings. Microsoft reported earnings, and the actual earnings per share, which is the EPS, came in beating expectation at $2.94 versus the expectation of $2.82. And revenue also came in at $61.86 billion versus the expectation of $60.84 billion. And the main focus for Microsoft, just so you guys can kind of see, is Microsoft's earnings top estimate as cloud business grows. I don't know if you guys remember the previous time that Microsoft reported earnings, but a big focus was its cloud-based business. And this time, they actually exceeded expectation. Okay, great. What about Google? Well, Google's parent company is known as Alphabet. Alphabet reported earnings, also beating expectation, but a little bit different. Alphabet reported 1.89 earnings per share versus the expectation of 1.51, much better than what was expected. Revenue came in at 80.5 billion versus the expectation of 78.7, also beating expectation. Okay, well, both beat expectation. What was different about Alphabet or Google that caused it to push up so much more than Microsoft? Very simple. You have to understand, remember, this is where guidance comes in. And anytime, this is one thing, again, that just from my experience, this is something that happens very often when it's announced for the first time. And Alphabet for the first time announced that it's going to offer its first ever dividends payouts, which really intrigues a lot of new potential investors, where a lot of investors tried to make passive income off of these dividends by investing in these companies and being offered dividends, as they get paid out. And now finally, Alphabet is offering that, which is going to attract a lot more long-term investors. So that's one of the positive takeaways. The second positive takeaway is also a $70 billion buyback. So again, it's always great to see when the company is buying back their shares, making sure that they control a little bit more of kind of, I would say, the market cap is the best way that I can put it. So overall, one thing that I wanted to share with you is revenue increased 15% year over year, the fastest growth since early 2022. Again, not only did they beat expectation, they exceeded expectation, but on top of that, they also kind of, it's like the sprinkles or the cherry on top. When they announced this first ever dividends and when they announced these share buybacks, it really excites investors, making them feel comfortable being invested in these companies. So let me know how I did in this video. I hope that I made it super easy to understand what was reported and also why it is that the market reacted in such a bullish and positive way. Other than that, again, I will be trading live right at market open. And just like you guys see, you're going to be able to get to watch all of my good trades, all of my bad trades, and it's going to be very exciting because now Google and Microsoft are very overbought. Now, if the hype doesn't continue into tomorrow on Friday, and guess what's going to happen? We might see a correction. Not that it has to, but just in case it does and markets begin to pull on back, I would love to potentially short these opportunities if we get confirmation of that sell-off. But guess what? We'll catch you in tomorrow's live. And if you want to tune on in, it's the second link in the description down below. And yes, it is 50% off right now. So I'll see you at market open. Hope that earned your thumbs up. And like always, let's make sure that we end the year on a green note. Take care, team.